Hello, everybody. Welcome to another weekly stock market update. I'm your host, Mark Yegge. Glad you're here. Thank you for being here. Let's jump right into it. We are having an interesting week. It's one of these melt ups. I called it almost a couple months ago now. And I said, this feels like one of those old melt ups where everybody's like, oh, we're going to go into recession. And, they say that markets climb a wall of worry. So none of those things have turned out to be true. And in fact, the Fed has kind of reversed itself and they're going to print money, and that's bolstering the markets. Now, we're not having the strength of moves in a lot of stocks that we were having, but we are having them in some. So I'm going to go through my whole shebang here that I just went through for my mastermind group. So you're getting a little extra, at least the top of the call, not the whole discussion that we have, but you're getting the whole stock chart reading that I do. So I'm going to give you some of that because I think it's really telling. The reason I do this for my group and I do this and I put a lot of stocks here on the weekly update is because stock technical analysis, you might say it's tea leaves and you might say it's astrology for dudes or whatever you call it, but there's something to it. There's something to it, and I'm going to show you. So let's start with the market update here. So we have three greens and a red. The momentum indicator has turned red. So now we're a little bit red this week. But still, three greens and a red means that we're in a buying condition, and the primary trend is in a solid green market. So it could totally shift. The market could drop, and that'll give us another red light, and then we're in a yellow condition. But right now we're in a green condition, so we should be 60 to 80% invested. Taking a look at the major indexes, the NASDAQ has got what, 6 days in a row of up, right? It's just not up on a lot of volume. You'll see that's the same thing going on for all the indexes. It's not up on a lot of volume, but it is up. So price matters more than volume, but volume colors price. And when it's not up on volume, that tells you there's not a lot of conviction. That being said, we had some nice healthy bounces and a lot of days in a row. So looks like we're heading back up for those highs again. S&P 500 index, same thing, not as strong, but heading up right back up at the highs right now. Dow Jones Industrial, same thing. It's up at the highs as well, but it did have a little reversal candle today, but it's pretty low volume. And then the NASDAQ, same thing. You kind of see how it's kind of going sideways here for the last couple of weeks. That's a bit of a consolidation on the top of a nice run up. That tells me that this could be like a landing on a stair step where you have a landing and then you keep going up. That's kind of what happens a lot of these times. You get a little stair step. By the way, this is education and information, not financial advice. So learn from it, but don't trade off it. I'm just a bald guy on the internet. All right, CBOE, volatility, the VIX, it's down, back in the 12s. When it's low, that means the market is fine to be investing. When it starts going up, that means there's a bit more panic. Hasn't been a lot of panic in this market for a while, since October. Apple. I told my mastermind group people, I might have even mentioned on this weekly update last week that it looks to me like Apple's going to go down and blow through its 50-day moving average, which it did, and test its 200-day moving average. Looking at this chart, and you can't tell me these markets are not manipulated because it went down and it touched the 200-day moving average, that black line right there, to the penny, and it reversed. So it's been up every day this week, slightly, not a huge amount, but it has bounced off that 180 level, which was the 200-day moving average. It's just amazing that people don't think that they can look at charts and read them. And I said, I think that's what it's going to do. Now, it could have blown through it, and if it did it on light volume, that wouldn't have mattered either because it's bouncing back up. But it did go down, it touched it, and it's bounced back up, and that's a healthy bounce. Super microcomputer is making this long consolidation there. It's right at the top of the consolidation. It looks like it's poised to break out. So we need a market to cooperate. We need some volume, but look at the right side of that chart on the volume. It's all high volume as it moves up toward its breakout point, which is 357.10. And so taking a look at that, SMCI in the right sector, right? It's in the circuit board chip sector, all that kind of stuff. It's making a really strong case. And this is one of my stocks of the year. It's making a case to go higher. On semiconductor, a couple of weeks ago, I said, there's a couple people that own this one. It pays a lot of juice, but it's a rough one to own because it's very volatile. And I said it's going up to its 200-day moving average, the black line there, but it's going to bounce down off it because it just doesn't have enough volume to get back higher. And that's exactly what happened. It tried twice to get over that 200-day moving average, and it can't do it. So it's coming back down the other side, and right now it's testing the 50-day moving average. The NVIDIA stock, if you're following or trading in NVIDIA, you know that it's on a breakout. It's up 8% from its breakout. I've been talking about for weeks how 505, 504 area is the breakout. Sure enough, I guess I'm a good astrologer, but I'm not always right. I'm just playing probabilities, guys. This is not Nostradamus stuff. This is, I look at it and I say, I think the breakout point is 505, 504. And as soon as it gets enough volume, that's what happens when these stocks break out. And you want to be with the momentum on these breakouts. So looking at the last week of candles, all those candles are sticking up above the 50-day moving average. And that stock is breaking out. So it's broken out from basically, 2 weeks ago where it was down in the 480s or 470s, and now it's 547. Okay. So it's really on a run. I believe that the stock is going to 600. That's generally what they do. I might have even said this last week on this update. I don't remember which stocks I do. But I think that's where it's going. And sure enough, that it looks pretty strong to me right now. Tesla is a different story, and I'm going to do the weekly and the daily on Tesla because this is really important. So if you look at Tesla, you see that it's on one side, it's got 4 weeks of selling, right? Down through the 50 and down through the 200-day moving average today. Lousy action. But if you look at the bottom, there's no volume. That means there's no conviction on the selling, which tells me that it's not going to take much for it to bounce. Now, it's into the candle from 9 weeks ago, that candle from, early December, maybe late November. And so that looks to me like it doesn't even have, you see how that little blue line is sticking above the average down at the bottom, the volume average. That's a skyscraper, a little low-rise skyscraper, but it's sticking up. It's not even close this week to getting above that. So that tells me it's a light volume, probably going to bounce. I don't know if it bounces today. The probabilities are running out for that, but I think maybe next week we get a bounce off that 200-day moving average on Tesla. Who knows? When the wind blows the wrong way, people start selling off Tesla. This is a really hard stock to be in. But if you believe in what they're doing long term, you've got to just kind of keep looking at the long term. You can't look at the fact that the press is against Elon Musk because he's apparently a druggie. You can't look at the fact that that they're shutting down a little bit of production for a couple of weeks in Germany because of supply chain. You can't look at any of that stuff. So that's the weekly. Now looking at the daily, you can see I drew a line here at that 228.20. That was a low swing point, right, on decent volume. So that was the last decent volume swing point at 160 million. But you can see over on the right side of the chart, we're nowhere near 160 million for the day, either yesterday or today. So it's a low volume bounce down through that 280, down through the 200-day moving average. And to me, it probably wants to go back up above the 200-day moving average. These things are hard to predict, but that's what I see on the charts. And it's all about probability. It's not prediction, right? JP Morgan Chase went up, blew away numbers, did something with numbers, and was way up this morning, and it's given it all back today. It's actually down right now. So that's what I'm seeing right now, everybody. So thank you so much for being here. I hope that helps you kind of read the tea leaves in the market, and I hope it helps you kind of get, excited about something or learn about something and invest. I invest for cash flow, so a lot of the stock chart reading doesn't matter once I'm in a stock, but it is important to know some of the support and resistance levels. So listen, have a great weekend. Thanks for being here, and I'll see you next time on the stock market update. Take care. Bye.